Hey everyone, this is an excerpt from my second interview with Ali Moen Afshari. For those of you who are not familiar with him or his work, he is a professional trader, he's a professional trading educator, and he's also the CEO of Quant Systems. Quant Systems has a whole host of professional trading programs, with the newest one being Trade With Me. Trade With Me will give you an opportunity to watch Ali trade live based on the fundamentals of market behavior. He's going to teach 6 hours of content every month based on the first principles of market behavior and then trade at the end of each month to give you an inside look at how to execute based on those first principles. Ali has taught and traded live in front of hundreds of people, but only at exclusive workshops. And now he's finally bringing that opportunity to the public. So if that's something that interests you, check out the link in the description to learn more.
And since, I've been giving you examples about breakouts and second leg trading, just let's focus on that.
Yeah.
So look at this chart. How many setups do we have this day? And this is just a random day, right? So we have the initial big reversal, the opening of the day, one more leg down, so that worked. We have this breakout resulting in one more leg up, or this breakout resulting in one more leg up, two. Then you can say this was all a triangle. It had still reversals and second legs in it, but let's ignore all of that. Then we have this new breakout and one more leg down. And then this is good still, very powerful, very intact. One more leg down, reversal up, look for buying a pullback, one more leg up. So how many do we have today? The easy ones, one here, two here, three here, four, and five. So there are five really clear trades on this day. So let's take this chart as an example. If somebody was trading this with micro contracts, micro E-mini contracts, micro ES contracts. So you look at the price vector at the right side of the chart. Each line is 10 points, right? 4370, 4380, so there's 10 points. So let's say you capture half of it in each of these legs. So we had 5 trades, all of them were winners. So 5 points, that's 25 points. 25 points multiplied by 5 is $125 at the end of the day. So to get to that $500 mark, you just need to trade about 4 contracts, 4 micro contracts with a very simple process. So you don't need much, really. So small account, probably you trade 4 micro contracts, you need $20,000 to $40,000 account. So if you take, the 5 trades on this chart, all of them were winners. But let's say you mismanage some of them, or you don't take some of them, or you have losses, you're going to end up with that 250, because some days you're trading better, you get 5 out of 5, some days you get 4 out of 5, some days you get 3 out of 5. Some days you might, at the beginning especially, break even. So I think having the goal of 5 good trades with a very high win percentage and being able to at least capture a profit that's half of that, which is 250. If you trade all of the 5, it's going to be $500. So let's say at the beginning you make mistakes, you miss some of them. So it's fairly reasonable to look for $250.
And then you also, when you were going through this chart, you also mentioned off camera that there are also a lot of little trades, smaller second legs that as you get more advanced, that you can also take those. So those the 5 main second legs you mentioned were the bigger ones, larger structures. But then within that, can you show some of the smaller ones that traders will start to take as they get more advanced?
Yeah, certainly. So if you look at the chart again, so all of this leg down is just one leg, because we have every high below the high of the prior bar up to this point. So we have 1, 2, 3, 4, 5 bars down. This is all one leg. This is the first break, first pullback, and that starts the second leg down. The way I like to teach people to trade these is actually with limit orders. So we would not wait for, let's say, bar 7, which is the low one short, to trade. My students will probably take a short up there with a limit order. But doesn't matter, either here or here. So that's one more leg down. Now on the On the way down, we see a possible wedge because this is actually the second leg from the bigger sell-off that happened towards the end of the prior day. And this leg down has three parts to it. So one part is here, down, pause, and down. So 10 is potentially a wedge reversal signal. You can buy that looking for second leg up. So that's the second trade here. So up to this point, we have two trades, one short and one long. Then all of this is in a tight bull channel, which means probably going to get something, a test up. So this is trade number 3 over here. And this is actually in a very tight channel. It's a micro channel. So it's going to hesitate or something. There's a small scalp here. Let's say we ignore that for now. Then we have a big reversal with follow through. And this traps all the bulls who bought on bar 14. So it's probably going to be a test here and a second leg down. First reversal, not high probability because of the micro channel. Second reversal, much better. We usually like to take this type of a trade in this kind of a situation with a limit order in the upper part of that sell signal bar. That's one of the techniques I teach. So this would be trade number 4 for us. This is a breakout potentially because it went below the low of the last swing point. And the last swing point was not a major one, it was a lower high. So this is potentially a bear breakout. It didn't get the confirmation, but the leg down is very consistent in a tight channel. Wait for a low 1 or low 2 short and sell again. So this would be trade number 4 right here. Now this is good to expect the second leg down. So trade number 5, selling the bad buy signal bar, bar 36. This bar 40 also has the same situation, same issue. Very tight channel, bad looking buy signal bar, doji basically. So it's going to result in a minor reversal or a pullback rather than a major reversal. You can fade this, fade the breakout, or just wait for it to fail and then trade. So here's the failure. Take the short on 43 or 44. 44 is higher probability. So this is trade number 5. Now we have a big wedge, 3 legs down or 4 legs down in a trading range day. How do we know it's a trading range day? Well, half of the day was spent in building a triangle. But the first reversal, low probability because of the tightness of this channel. So ignore this one. But if you buy it, you need a wide stop. There is potentially one more leg after this. So you can still trade for a short here or stay flat to catch the reversal. Both of them are reasonable, reasons to trade. So this would be trade number 6. Or if you ignore the sell here, this is a micro channel, 3 bars down, below the moving average in a bear market regime. So probably going to get one more leg down. So either this is trade number 6 or this is trade number 6. Then you have a double bottom reversal. Don't take the reversal, but look for the breakout and take the breakout. So now we have 4 bars up here, 5 bars up. We can buy and not wait for the pullback, potentially trade number 7. Or buy near the moving average below these dojis and look for the trend resumption up. And that would be the last trade of the day. And in the process of explaining all of that, I ignored probably 80% of the detail. So this day had potentially 8 good trades. For a scalper, it had probably 30 good trades. So depending on your skill level, where in that process you are, from the very earliest stage, trader who just sees the bigger picture and takes 4 or 5 trades, to an advanced intermediate trader who takes about 8 trades, to an expert who takes about 20 trades. All of that amount of opportunities available on this chart.